What is tax? Why do we pay tax? Whom are we paying tax to? Where are all this tax money going to? Let's talk about all this in this video. Think about government as a big organization, and for this organization to run its day-to-day activities, they need money. Our government is doing their part of the job, like building infrastructure, roads, hospitals, running government organization, etc. for us, for the people, right? Thus, they take a part of our income, which is called tax, to run their day-to-day activities. The Indian tax system has a three-tier federal structure consisting of central government, state government, and local municipal bodies. Taxes are used by a government for a variety of purposes like funding public infrastructure, defense and scientific research, salaries of state and government employees, operation of the government, public transportation, unemployment benefits, pension schemes, law enforcement, public health, public education, and so on. Advantages of paying tax. Apart from paying a part of your income as tax to the government, you'll also get additional benefits such as loan approvals. When applying for a loan or a vehicle loan, majority of the bank ask for your ITR returns, that is income tax returns. Having an ITR can get you a higher loan amount, or the loan application can be reconsidered if it was rejected in the first place. This is because the bank calculates the ability of you to repay your loans based on your income. Income tax return give a very clear picture of your income and the taxes that you have paid in the previous years. Visa application. Many foreign consulates require you to file your income tax return of the previous years when you have the visa process. This is mandatory for the UK, US, Europe and Canada, but not so much for Southeast Asian countries and the Middle East. This is because income tax returns are a proof that you are not trying to leave the country to evade taxes. Carrying forward of losses. Short-term and long-term losses are carried forwarded to adjust with the capital gains you made in the subsequent years. For example, long-term capital loss of 1 year can be carried forwarded to 8 consecutive years from the year you had the first loss. However, this can only be availed if your income tax has been filed. Claiming tax refunds. Any refunds that are due from IT department can only be claimed if you have filed your ITR. Even if your income is below the tax exemption standard, you can still avail for refund through different saving instrument by filing ITR. High cover life insurance. Life cover or term policy with some insured of more than 50 lakhs can only be availed by showing your income tax returns to get the verification of your annual income. Such high insurance is only given to the people with high income, thereby providing your ITR which shows your annual income. Compensation. For self-employed people, ITR receipts have to be furnished in order to claim compensation in the event of accidental death or motor vehicle accident. This is because in order to arrive at the appropriate compensation, income of the person is to be verified. Penalty for not paying taxes. The government can impose penalties of varying degree to any individual or corporation who evade tax. The penalty is dependent on the category of tax that has to be paid. Hope you found this video useful. Give a thumbs up if you like this video and don't forget to subscribe to stay tuned with the upcoming videos. Thanks for watching. We'll see you next time.